Okay, guys. So today let's start the class. So we have covered till money and financial institutes, right? Last class we covered that area. So today we will be starting insurance, and I'm planning to finish this tute, but I don't know how successful we will be in that. But let us try to do that. Okay. So today let's start insurance. Okay. So you know what is insurance, right? Insurance is a supporting service, right? Or we say it's an auxiliary service, right? These services, they are provided by to encourage the business activities, right? So in insurance, what is happening? In the there will be two people. There will be how many parties in an insurance? Tell me. Parties involved in an insurance, there are three, right? First is the insured, and the next one is the insurer, and there is a third party also. Yes, Akhil. Okay. So the insured is the first party. So who is the insured? It can be a person, or it can be a group, or it can be an organization, a business. Okay. So they are the ones who will come and insure their life, or sometimes their property. Okay. So he is the first party. Okay. So he is the first party. So remember, it can be an individual, it can be a group of individuals, or it can even be an organization. Okay. So they will come and insure maybe their life or their property. That is, those people are what we call as the insured. Okay. And next we have is the second party. So second party is the insurer. Who is the second party? The insurer. So this insurer is simply the insurance company, right? The company, like who is undertaking, to compensate those losses. Now, losses can be insurable risks and sorry, those risks. Okay, so that can be insurable risk or uninsurable risk as well. Okay, so the parties who are undertaking to compensate those losses, or the liability, or the risk, that is those people is what we call as the insurer, or simply the insurance company, the second party. And the third party is, or any other party who has been compensated in the considering damage. He is the third party, right? Any other party is compensated apart from this insured, and apart from the insurance company, which is insurer, any other party who is compensated in this insurance. Okay, maybe the general public. So they are the third party. Okay. So what is insurance? So this insurance is a supporting services which is provided to encourage business activities. Okay. So this, in insurance, the insured, he will pay a particular premium payment to whom? To the insurance company, who is the insurer. Okay. So this insurer, what will he do is, while now he will pay compensation if the considering risk, or if the damage had happened, he will pay compensation to the insurer. Insured. Okay. So that is about a brief definition of insurance. It's a supporting service provided to encourage business activities. Okay. And also in insurance, the insured, who is the first party, will pay a particular premium payment to whom? To the insurance company. So in return, that insurance company, who is also known as the insurer, he will pay the compensation only if the considering risk has been created, or if the damage had happened, he will pay the compensation. Okay. So simply that's a definition. Now in this question, they are asking to mention some risks that cannot be insured. Now look at here. Now insurance, they are there to compensate risk, but every risk can't be compensated. Okay. So there are certain risks that you can't compensate. So what are those risks? The first category is, now, for example, I'll tell you, we are watching match, right? If you lose a match, or if you lose a game, can that be compensated? You can't, right? Or if you fail, if not you, okay, someone had failed the exams, can they compensate? Can't. So any type of risk that is getting decided based on personal talents or based on skills, you can't compensate that. Write it down. Any type of risk that is getting decided, you should be quick, okay? Any type of risk that is getting decided based on personal talents and skills. Any type of risk that is getting decided based on personal talents and skills. That is what we, the example only, the examination failure or losing a game or a match. That is what we call as this type of, so that is the risk which you can't compensate, one of the risk, okay? And the second one, if we still lose, yeah, you get prize money. Yeah, that is not related to insurance. No, you can't go and tell an insurance company, yeah, I'm going to play a game. Please insure my game. Because it's according to your talent. No, so they won't insure that because that is happening based on a personal talent or based on a skill, right? So you can't compensate that type of risk. Okay. So is there any other messages? Who pays premium? Oh, so premium is paid by the insured. Okay, the first party. And can you please repeat the answer again? Yeah, sure, Ramalakshmi. So that is any type of risk that is getting decided, any type of risk that is getting decided based on personal talents and skills. Any type of risk that is getting decided based on personal talents and skills. Okay. And the second type of risk. Okay. Now we are aging, right? We are aging. And also if you take the machines, they get depreciated, isn't it? So can you go and insure because you're aging, please insure me because of I'm aging. I'm growing, so insure that. You can't. And you can you go and insure your machines because they're getting depreciated. That will however happen. There are certain risks, right? That will however happen. So you can't insure that. So any risk that is happening naturally, any risk that occur naturally can't be insured. Okay, so write it down. Any risk that may occur naturally. Okay, any risk that may occur naturally. Okay, and the next third type of risk. Okay, now let's say that now you are a manager. Okay, not you. Okay, so in your business there is some management disputes. Okay, so because of that you are losing employees. Can you go and tell your insurance company, I want to insure this instance? You can't. Why? Because that risk has happened because of incorrect management decision. Any risk that happens because of incorrect management decisions can't be insured. Okay, so write it down. Any risk or loss, natural disaster occurring naturally, but it's compensated now. So actually natural disasters are not certain. No, every time it doesn't happen, right? Only once in a while it happens, right? So even tsunami, we got it 20 years, right? Yeah, 19 years back we got it, right? So we now still we didn't get another tsunami. It doesn't like come with an announcement, and it's not sure that at this time it will surely happen. Not like that. No, it comes suddenly, so that can be compensated. You understand? Okay. Right. Great, but that's a good doubt. Okay, so any risk or loss getting decided based on incorrect management decisions. Any risk or loss that is getting decided based on incorrect management decision. Write something, guys. You need this revision before the exam. Okay, so it's like other things you study. Here you just revise whatever I'm teaching. Other things you study alone. You understand? Okay, great. And then now there are some losses you can't estimate financially, right? For example, we will have some people will have a goal, right? There's a person who wants to become a doctor. Right now he didn't achieve that goal. Okay, so can you financially estimate that one? The loss, it's a loss for him, but can you financially estimate it? You can't. Or else economic recessions. Now recessions are happening, right? Economic recessions. Can you financially estimate economic recessions? You can't. So any loss that cannot be financially estimated, you can't insure that. So write it down. Any risk or loss that cannot be estimated financially. Any risk or loss that cannot be estimated financially. Okay, right? And the next one. Now, for example, now always our technology changes, no? Our fashion get outdated, right? Can you insure that one? You can't, right? Now your fashion industry, now suddenly the fashion industry changes. Now, just because you're producing clothes that are famous, that are in demand before 20 years, you can't go and insure that one. No, you will face a loss now. No, many people won't buy it, right? So in that instance, that's a loss. You can't compensate that one, because changes in technology and outdating of fashion cannot be insured. Okay, now technology also constantly changes. That constantly happens, right? Every year you get a new version of WhatsApp, at least 2 to 3 times you update it, right? Message me only, not only. Okay, okay, okay. Give me 1 minute. Give me 1 minute. Okay, guys. Okay. What was I telling? Changes in technology and outdating of fashion. Okay, changes in technology and outdating of fashion. Okay, so those type of risks cannot be insured. And the next one is the risk of the entrepreneur. Okay, now entrepreneurs, they have to face risk, right? The losses in a business. Okay, so just now I saw that message also. Someone asked the losses in a business. Okay, uh, so what you have to do is you have to insure. You can't insure those risks. Okay, you can't insure business risk. Okay, so the last one is the risk of the entrepreneur cannot be insured. So that is the main theme of entrepreneurship, right? That's one of the main characteristics of entrepreneurship, isn't it? So that is, you have to take risk. You have to face risk. So why do you have that characteristic actually? If you can insure, why do you have that characteristic? Right? So, what was I telling? You can't ensure the risk of entrepreneurs. Okay? So that is the last type of risk that you can't insure. If you are clear, raise your hand. Okay, the answers I'll repeat again. So first one is any, okay, third point. Okay, wait, first of all, first one is any type of risk that is getting decided based on personal talents and skills. Okay, that is first one. Second one is any risk that may occur naturally. Okay, and the third one is any risk or loss getting decided based on incorrect management decision. Any risk, or you can write any risk occurring based on incorrect management decision. Okay, and the next one is any risk or loss that cannot be estimated financially. Any risk or loss that cannot be estimated financially. Okay, and the fourth one is changes in technology and outdating of fashion. Okay, and the fifth one is the risk of the entrepreneur. Okay, right. Okay, so what are the factors that should be fulfilled to start an insurance agreement? Okay, so what is this insurance agreement? Now, it is a written agreement. Okay, now this agreement takes place when an insurance proposal form, which is presented by the person. Now, let's say there's an insured. Okay, so he is presenting an insurance proposal form. Okay. Okay. Come and he'll present an insurance proposal form. Okay, so he wanted to obtain an insurance coverage, right? So if the insurance company, if the insurance institute accept that one, then a contract between those two is formed. Okay, so that is insurance agreement. Okay, so if I want to give you the definition to write now, please write, but I'm reading. Okay, insurance agreement is a written agreement insurance agreement is a written agreement that takes place when an insurance agreement is a written agreement that takes place when an insurance proposal form takes place when an insurance proposal form presented by the person who intends to obtain an insurance coverage, who intends to obtain an insurance coverage, presented by the person who intends to obtain an insurance coverage, is accepted by an insurance institution. Insurance institution. For again, I'm telling you, insurance agreement that takes place when an insurance proposal form presented by the person who intends to obtain an insurance coverage, presented by the person who intends to obtain an insurance coverage, is accepted by an insurance institution. Okay, so that is accepted by an you have to take the key points. Okay, if you find this definition is agreement between who and who, between the insured and the insurer, between the insured and the insurer. Okay, between those two people only this agreement is taking place. Okay, so what will the insured do? The insured will present an insurance proposal form, right? He'll give an application, a proposal form that he wants to compensate his life or whatever, his property. Okay, so he will present an insurance proposal form. Okay, insurance proposal form, and this insurer, he will accept. If he accepts that insurance proposal form, then this insurance agreement is created. Simply you can write in your own words itself. It's a written agreement between an insured and the insurer. Okay, insured and the insurer, where the insured will present a insurance proposal form to compensate his life or property, and this insurer is this insurer has accepted that one. That is insurance agreement. Okay, Other messages. Did their answer again? Okay, I'll read it again. Agreement that takes place when an insurance proposal form presented by the person who intends to obtain an insurance coverage comma, is accepted by an insurance institution. So now if you have still not written, guys, if anyone has written that, please type and send it to me, okay? We'll move quickly to the other section. Okay. So what are the factors will be included in an insurance agreement? We'll cover that area also in this question. What are the things, what are the information, what are the factors included in this insurance? Guys, you all can hear me properly, right? Am I loud enough? Wait. Okay, great, guys. Okay, so what are the information that will be there? Okay, now am I fine? Some people, I think, finding it not clear. Okay. Only one person, I think. Please check your connection, dear. Okay. So what are the factors that will be included? Okay, guys. That will be included in an insurance agreement. First thing is the information. Sometimes it's like hold. Okay. Okay, first thing is the information on the insured and the insurer will be there. Information about the insured and the insurer will be there. Okay. And the next one. What is the risk you're covering? What is the risk being covered? Or what is the asset that is being covered? Will be mentioned. The details about that also will be mentioned, right? So insured and the insurer information. And what is the risk and asset that is covered? Next is the validity period of the agreement. Now, agreement, there's a validity period. So that will also be there. Okay. Okay, someone has sent that thing. I'll send it to you all. Okay, wait. Meeting everyone. Where is it? Okay, so this is the definition for insurance. Okay, great. This can the attack covered with validity period of the agreement will be there. 1 year or 2 years, whatever the validity period will be there. And the premium payments, yes, like as Mr. said, that's correct. Premium payments will be mentioned. Okay. So, and the next thing is the compensation payment. So, premium payment is made by whom? The first party. Who is the first party? The insured. Okay. So, the second party is the insurer, which is the company. Okay, which is the company. So, what he will pay is compensation payment. So, that will also be mentioned. Premium payment, and the next one is compensation payments. Okay, and the next information will be now this agreement, whatever, if you there's an option to cancel everything, right? So what are the reasons for cancellation? What are the reasons that can be there to cancel this agreement? Okay, so reasons for cancellation will be mentioned. Okay. The reasons for cancellation will be mentioned. Anything else that you all know? If you all have any other answers, let me know. Oh, okay. Amina, you have raised your hand. Any problem? You need to know anything? Okay. The first point is the information on insured and the insurer. Okay. Okay. So when the coverage is not matching with the requirement. Yeah, actually, it's like if it is not matching with the requirement, they will not even form this agreement. You understand? So everything is after evaluating everything only they will form. You understand? So the premium payment is low, but you wanted to cover cover something big, then they won't accept this agreement at the first place. Okay. Yeah, date of the agreement, whatever. Those things will be there. Great. Okay. So now what is it? Okay. What else? Who will pay the compensation payment? The compensation payment is paid by the insurer, the insurance company. Okay. The payment made by the insured is the premium payment. Okay. Remember now how to remember this insurer and insured. You know how I remember? Insured, the last letter is D, right? So, and the insurer, the last letter is R, right? Silly, but easy to remember. So, D comes first. R comes next in the alphabet order, right? It comes next to D, after D, no? So, the first person is only the insured. That's how I remember. The insurer is the second person. That's how I remember, okay? So, just to, because I have got answers like you send and then you send it back again because you're confused. Okay. Remember like that. Okay. And here, who are the parties that are involved in insurance? Okay, so I already said that. That is the first party who is the insured, and the second party who is the insurer, and the third party. Okay, okay, I'll tell you an instance. Now, listen to me. Okay, Mr. Pereira has insured his car. First party, second party. Yeah, Mr. Pereira has insured his car in Selinco Insurance. Okay, uh, his car met with an accident and a public wall was also damaged. Okay, so what did I say? Mr. Pereira, he had insured his car where? In the Selinco Insurance PLC. So after sometimes he met with an accident and the public wall has got damaged. So who is the first party here? Tell me who is the first party here? First party is the insured. Okay, Mr. Pereira. Who is the second party here? That is the insurer. Yes, great. That is the insurer. Yeah, second party is the Selinco. Who is the third party here? Yeah, he's also involved in insurance party. Not the wall actually. He is the owner of the wall. Okay, third party is not the wall. It is the owner of the wall. Okay, okay, the owner of the wall. Okay, so right like that. If there's a thing, if let's say he had damaged another car, not the car. His car is not the third party. The owner of the car is the third party. Okay, something like that. And was there any other messages? Third party also yes, third party will also get involved in the insurance policy. That is any other party who is compensated the insurer. Okay, right. Now let's go to this. Okay, if you had understood everything clearly till now, raise your hands to see. No, first party is the insured. Okay, the last letter is D. In the alphabet order, it comes first. No, insurer, the last letter is R. So since D comes first, insured is the first person. Okay, what is third party? Okay, types of insurance. When I come to that types of insurance, I'll tell you. That's a third party cover you're asking about. I'll tell you. Okay. 27th question answer. That should be fulfilled. Start an insurance agreement. Oh. Wait, guys. Actually, can you see this 27th question? The question is, what are the factors that should be fulfilled to start an insurance agreement? I explained about insurance agreement, but I didn't give the answer for this one. Okay. So what is the answer? Wait, just now I noticed. Okay, thank you for telling that. Okay, now for this what are the factors that should be fulfilled to start an insurance agreement? Now, I told you the definition for insurance agreement. I told you what are the factors included in the insurance agreement, but I didn't tell you what are the factors that should be fulfilled to start an insurance agreement. Okay, so there are 5 factors. Okay, there are 5 factors. The first factor is an offer. What is it? Offer. Okay, what is an offer? Yes, what is an offer? Now, this insured, he should make a proposal to the insurance company, right? He only first of all has to initiate it. He has to go and make a proposal to the insurance company by just because he likes the insurance company? No. To insure his life or to insure his property. Okay. So how can he do that? How can he do that? He can do this by completing the insurance application form. That is how you give a proposal to the insurance company. Okay. So now just because you gave the offer doesn't mean it doesn't mean that there's an acceptance there. Right? Agreement is formed not like that. Offer should be accepted by the insurer. Okay. So remember, like a story, the offer is what the insured, he should make a proposal to the insurance company. Why? To insure his life or to insure his property. How can he give an offer like that? By completing the insurance application form. And now the insurance agreement is not formed. Okay. Yeah, it's same, Mr. Actually, proposal and offer, it is like same, but don't use the word proposal. That is for the definition purpose. Use the word offer, right? Okay. So he can do this by completing the insurance application form, and now that he has to wait for the acceptance of the insurer. That is the first factor that should be fulfilled to start an insurance agreement. And the next factor is acceptance. Okay. The next factor is what? Acceptance. Now, the insurance company, just because he gave an offer, will not accept it at once. What the insurance company will do? He will evaluate the offer which is made by the insured. He will go and now he will evaluate. Now he will check on the insurer whether he is able to pay the compensation or not. Like that, he will evaluate the insured. Okay. And if it is accepted, now if it is only accepted if the risks are insurable. Now let's say that person has proposed, that person has asked to compensate his aging problem or something, so it will be rejected. If the insurance, if the proposal is acceptable, if the risk is acceptable, then only, if the risk is insurable, then only they will accept that offer. Who? The insurance company. And also the insurance company should be sure that he has the capacity to continue the policy. He has the financial capacity, something like that. Then only acceptance take place. Okay, so in the acceptance, what happened? The insurance company will evaluate the offer which is made by the insured. Okay, so he will evaluate whether it's an insurable risk or not, and he will evaluate whether this person has the capacity to continue this policy, insurance policy. Okay, so then only acceptance take place. Okay, so what is this insurance policy actually? What is insurance policy? This word has a different meaning. Okay, so insurance policy. Now, insurance agreement is a written agreement, right? Once you complete that agreement, this insurance policy is given. That is a written certificate. Okay, they are the insured will give an application form to the insurance and do stuff. Now, after this insurance agreement is formed, this insurance company will give you an insurance policy. That policy is a written certificate. Okay. So in the insurance policy, all the terms and conditions of that insurance agreement will be mentioned. Okay, so that is insurance policy. Okay. Now the third thing is consideration. The third factor that should be fulfilled is the consideration. Okay, my handwriting is a mess, but it's consideration, or we call it as financial value. Consideration, or we call it as financial value. Okay. So now there are three parties actually. Initially in the agreement, who are getting involved initially? The insured and the insurer, right? Now it is an agreement. So there should be give and take, isn't it? So what is a consideration means kind of price or the money, something like that. No. So consideration has another word here. It's financial value. Some people, some lecturers tell it as financial value. Okay. So now this insured, what he should give? He should give a premium payment to the insurer. Remember, D comes first, that is the first party. Okay. So insured gives a premium payment, pays a premium payment to the insurer. And what will the insurer give back? The compensation payment. So this is what is coming under consideration. Okay, again I'm telling, in the insurance agreement, there will be a particular premium payment that the insured should make, and also there is a compensation payment which is done by the insurance company. Okay, so that is coming under consideration. Okay, and the fourth factor. Okay, till this, if you are clear, raise your hand. So others, lower the hand. Is it? To see, then I can move to the other things. So others, I want every one of you to raise your hand. Okay, guys, I hope others are also here. Okay, right. And the fourth factor is ability or the capacity to bind with the legal contract. Now, this agreement is accepted, and if it is accepted, if it is offered and then accepted, it becomes a contract. Okay, there's a difference between agreement and contract. But I have studied that in the CIMA level. Okay, so you don't need to know that now. Okay, so ability or capacity to bind with the legal contract. You should have the ability to come and bind with the legal contract. No, you should have the capacity. So what is that? Now both parties should have the ability. Both parties should have the capacity. Okay, insurance company, what is the ability or the capacity he should have to bind with the legal contract? What is, let me, please tell me. Okay, what are the messages? Offer again. Yes, I'll explain once I'm done. Okay. No, see, you got confused. Did I say insured? You also got confused. I think I'm asking about the insurance company. Okay. What insurer? Okay. What is the ability or capacity to bind with a legal contract? Okay. Now you know a place called insurance board, right? There's insurer like T board, like the telecommunication regulation, like that commission, like that. We have something called insurance board. Okay. Yeah, that is the correct thing. Okay. So this insurance company should be registered in the insurance board, and they should possess an insurance license. Okay. That is the ability or capacity that this insurance company should have to bind with the legal contract. That is, they should be registered in the insurance board and possess an insurance license. Okay. And what is the ability or capacity that the insurer should have? That is, in order to sign that agreement, he should be above 18 years old. Then only he can sign the agreement. Yes, age. He should be above 18 years. If not, he can't go and sign an agreement. Then it becomes invalid. He should have sound mind. Yeah, that's correct. But yeah, that's correct. That's come. Okay. main thing they check is the age. After that only they check the sound mind, but sound mind also should be there. You can't go take, let's say there's a person whose father and mother is passed away, but he's a property owner or something. Someone is going and taking him to sign, then it will not be, he's not he's not mentally sound. Then you can't make him sign, even if he's 30 or 50. Okay. Uh, Right. Not having criminal records. Yes, there should not be any criminal records. This is uh, Aisha, let me go through that. Okay. Okay. I think they are same, but I'm not really very sure. I'll let you know after I go. So, what was I telling? Okay, so this is the ability of to bind with a legal contract that the both parties possess. Okay. And what is the fifth thing? What is the fifth thing? Okay. It should be regarding a legal matter. Write it down. It should be regarding a legal matter. So what does this mean? Now, legally owned assets only you can uh, go and insure. Okay. Now, let's say there's a person who's doing a drug business or something, some illegal property sources he has, he can't go and insure that one. Okay. So what was I telling? It should be regarding a legal matter. Okay. It should be regarding a legal matter. Right. Now let's move to the 20th question. 20th we are done, no? What is, okay, 21st. What is meant by no claim bonus? Let me tell you. Right. Okay. Now this no claim bonus is a discount. Okay. It's a discount. Okay. Where discount applied where? It is applied to the premium payment. Okay. Now it's like this. Now let's say you have a motor insurance policy. You will have motor insurance policy, you know. When you are going, um, yeah, wait, I'll come to there. Okay. So when you're going and renewing this motor insurance, this discount is offered, but there should be a condition. Only if the insured has not had any claims during the previous year. Okay, now you're going and renewing your motor insurance policy. Okay, so when you are going and renewing your motor insurance policy for the next year, if you had not made any claims in the previous year, you have not made any claims in the previous year. So for the next year, what they will give you is a discount. Okay, that discount is applied to your premium payment. That is what we call as no claim bonus. Okay, so it is a discount applied to the premium payment. It is a discount applied to the premium payment. When the motor vehicle insurance policy, when the motor vehicle insurance policy to the sorry, it's a discount that applied to the premium payment. When the motor vehicle insurance policy is renewed for the next year, is renewed for the next year. Someone asked what is offer, right? I didn't tell. I'll come to there. Okay. When the motor vehicle insurance policy is renewed for the next year. Full stop and continue. This discount is offered. This discount is offered. This discount is offered only if the insured has not had Only if the insured has not had any claims, during the previous year, has not had any claims during the previous year. So, actually, what was your doubt, Hana? No claim bonus. Is it applied only for motor vehicle insurance policy? Usually, it is related to motor vehicle insurance policies only, particularly when it comes to car insurance. Okay, commonly it is related to that. But this concept, it is like, or this discount, it is not only limited to motor vehicle insurance policy. Commonly, it is related to this one. Okay. Uh, that is why I use the word here. Okay, but in your thing, this is what is given commonly. That's why some people say it's only for motor vehicle insurance policy, not only for that, but commonly it is for that only it is issued. Okay, but there can be some other exceptions where you can get no claim bonuses if you had not made previous any claims during the previous year. Is it clear? Okay, great. Okay, so if you want, you can just omit that word. Even if you use this, they won't cut your marks because it is commonly done in this case only. But if for your safe side, if you think that there some people might cut marks, then please what you do is don't write that word. Okay, for insurance policy. Okay, or else mention commonly and then write it. Okay. So first line is okay. Someone, can you type that definition and send it to the chat box so that we can move to the other, and I'll send it to the chat. Okay. So someone will send, then I'll send you. Okay. Now let's move to the next question. What are the differences between assurance and insurance? Okay, difference between assurance and insurance. Okay, now when I go to the some, I think we have more. But when I go to a question, I'll show the division of insurance. Okay, but for now, remember these two terms. Life, I hope you know this. Okay, life, sorry, assurance and insurance. What are the differences? Now, when it comes to differences, please write assurance, insurance in two sides, and then put a line in the middle. Now, assurance, what is insured is the human life. Human life is insured in assurance. Okay. But in insurance, properties are insured. Okay. Assurance, human life is insured. And in insurance, properties are insured. Okay. Properties are insured. Okay. Right. Okay. Right. And the next one is, now this assurance policy is relatively a long-term policy. Okay. It's relatively a long-term assurance seen, right? It's usually a long-term policy. But insurance, it's a short-term policy. Relatively, it's short-term. Okay, someone has sent that. I will give it. Okay, the definition for no claim bonus is 10. Okay, so assurance is long-term and insurance is short-term. Okay, you're welcome. Next one is now assurance is similar to an investment. Okay,
I'll tell you why. When I go to, I use, now typically I'm explaining the whole chapter, I think. Okay, so because now it's like an investment, you know why? I'll tell you. Mm, okay, so first of all, right, assurance is for, no, assurance is for life, human life. Insurance is for property. Okay, so now first of all, write it down. Policy, assurance policy is similar to an investment. But insurance, it's not an investment. It's like an investment. No assurance policy, you are assuring like your life. Now, if you, not you, okay, someone has died, so after I die, give this to my family, kind of thing. No, so it's like an insurance. Okay, and also under assurance, you have something called annuity assurance. Okay, now it's like this. It's like this annuity assurance. It's a type of policy which is issued by the insurance company that they are promising you that they will give you an income that can last you a lifetime. Even after you stop working, it's like they'll give you an income that will last you a lifetime. You understand? So that is annuity assurance. It's like an investment. That's why I use that term. Okay. That's why I told that assurance is like similar to an investment. Yeah, something similar to a pension, like they give you even after you stop working. Okay, and insurance, it's not an investment. Okay, even if you don't claim it before, they only give one option, which is no claim bonus. Other than that, they won't give you the money back for something. That's all. Okay, and next one is your assurance policy cannot be transferred. Can you transfer? Not you, okay, someone. Yeah, okay. So can someone transfer their life assurance policy to someone else? No, okay. So that cannot be transferred. Policy cannot be transferred. But insurance policy can be transferred. Okay, for example, motor vehicle insurance, you can transfer that policy. When you sell it, then you can transfer it simply to that person, and from there onward, he'll make the payment. Something like that. Okay, so policy can be. How can we differentiate assurance? You mean I didn't get it. Differentiate from insurance. That's what I'm telling now. Is that your question? Yeah, types of assurance. I'll come to that. The last question is about that. I'll come to that when I am going to that question. Okay, I hope we only will do insurance today. That's okay. Okay, let's just relatively okay. Okay. So now, yes, may I you tell? Okay. So assurance risk is relatively certain. Risk is relatively certain. I'll do it once I'm done with this. Okay. Okay. Risk is relatively certain because assurance certain risk no for life or for this purpose or that purpose, that risk is certain. But insurance, that's not, it's not relatively certain, it's relatively uncertain. You don't know what type of risk it will be, how much the damage will be, you don't know that, no. So the risk is relatively uncertain. How can I I don't know. That is, I think that is that is the most important thing, characteristic that you should possess as a teacher. So I don't think it. Yeah, sometimes it's difficult, but I don't know. Actually, you should have that characteristic as a teacher. As a sister, I don't have that characteristic. As a friend, I don't have that. But as a teacher, you should know what are the characteristics you should have. So yeah, even one day if you become a teacher, that will happen. Okay. So relatively, risk is relatively certain. So for insurance, risk is relatively uncertain. And the last thing is policy can be mortgaged in a bank. Assurance policy you can mortgage. You can keep in a bank and you can keep it as a mortgage. Okay, collateral. But insurance cannot be mortgaged in a bank. Simple as that. Policy can be assurance can be mortgaged in a bank. Uh, insurance cannot. Okay, so people who had missed from first I'll tell assurance, human life is insured, insurance, properties are insured. Okay, and one important thing I missed, I'll come. And the next one is policy is relatively long term, assurance policy. Insurance is relatively short term. Okay, and assurance, it's similar to an investment, and insurance, it's not an investment. Okay, and assurance, you cannot transfer, but insurance can transfer. Okay, and risk is relatively certain for assurance. For insurance, it's uncertain. Okay, and assurance, you can keep it as a mortgage in a bank, can use it, but insurance, you can't. Yeah, that is the thing I told, the important thing that I want to tell. Indemnity. Indemnity isn't applied for assurance, but for insurance, indemnity is applied. Okay, I'll tell you. The answer is like, wait, your doubt. Just give me 1 minute to solve this doubt. Insurance and transfer like when we sell our motor. Yeah, that's correct, Mr. We can transfer it. That's it. It's like you're transferring shares and something like that. Okay. Okay. Write it down. For assurance, indemnity is not applied. But for insurance, indemnity is applied. Before going to that, okay, you people are so stressful, right? How are you all feeling? Your exams, are you all ready? Just a small conversation. Are you all ready for the exam? How is everything going? Okay, not yet. Yeah. So yeah has many dots afterwards. Mm, not yet 100%. Multitasking right now. Yeah, you have to. Okay. Not yet 100%. Okay, that's how you will feel, but you are ready. Okay. Aisha 75%. Okay, that's really good. Mariam, sorry. Okay, think so. Not yet. That's fine. ICT, some people it's safe. Somewhat ready. Great. That's how you feel. Exams. Okay, no, not yet. Okay, you will feel not yet, still not yet. Till the end of the day, you study. Okay, you will have a pass it. There's lot more to study. Yeah, I understand. But I don't know how well I'm thinking. Mm, right. Trying the best. How you don't know how you're good in BS, right? BS, try to go to whatever the seminars freely or whatever it is, go and attend and listen to that. That will go to your head, okay? And also just calm down and read stuff and take it to your head. Don't by heart. If you think you have by hearted an area, please go and study it again. By hearting will take you somewhere that you don't imagine. Okay, if you buy me a cake, I will be very. You should buy me a cake actually. Okay. Stress, I understand. Strong enough to face. That's good. A little okay, but not something enough to fast because of that's fine, Shakira. You know, you after you sit to the exam, you will understand that you had done well. Getting improved day by day. Great, Aaron. And you like to focus on this. Yeah, sure. That's what I'm planning. Okay, next week, let's try to have inshallah many classes. I try to put my paid classes are also there. No, so when if my schedule doesn't knock each other, I'll put, but not fully ready. That's fine, Asta. You can call it like points. Yeah, the same thing. Okay, early mornings also okay. So you miss sleep early morning because I am at my vacation. No? Okay, I'll try to do it. Okay. Yeah, dedicated people point. Enough mind. know all the things in the US. It's there, it's there. 27th May last day. Is it? After 27th, can't we have classes? I'll do tips. I'll give you tips. No, what I do is I pray Subah, I recite, and then again I sleep at like 7 and I wake up at 10. Oh, I can't do classes after 27th. Is that so? Will you all complain me if I do? No, if I buy a cake, you won't. Physical classes only can't distance. Okay, no one will get to know. No, no, please, no, please, class. Sure, sure, just. I think physical classes only issue. Okay, okay, let's try to keep more class at least till fourth. But I hope you all will not take legal actions against me for these classes, stressing you all till the last time. I'll try, okay? I wanted to keep more classes. Tomorrow also I'm planning, but my paid class, yeah, let's see, okay? Okay. Hmm. Okay, someone, what is indemnity? What is indemnity? Sure, Sky, I include all my students in my class. Make dua for me also. Okay, so what is indemnity? Let's see whether you all can remember. Quickly refresh your mind. It's easy. Okay. Now rather than reading, I have typed. Okay. I'll send that. Okay. The compensation paid by the insurer to the insured to reinstate the loss. Yeah, that's one of the definition. That's great. The compensation paid by insurer to the insured to reinstate the loss, to cover the loss, to get that thing to back to normal, something like that. Okay. Uh, okay. Indemnity principle states that if a property is damaged, full compensation will be paid. That is, full damage will be paid. Actually, like this, when there is a damage to a property, compensations are equal or less than the damage or the loss. Sometimes there's something called over insurance and under insurance. Okay, can't remember. Yeah, it will be equal to the damage, or it will be equal to the damage, okay, to the property, or else it will be less than the damage. Sometimes it's unequal. There are two cases like over insurance and under insurance. Sometimes it will be lesser. Okay. What will you? What? Why? What did you ask now? I asked what is indemnity. Okay. What else? Yeah, those countries insurance company will never pay more than that. Yes, exactly. Okay, they'll get more, but they don't pay. Give us the thing. Okay. So this is just my thing. Take a screenshot or something. Just read it. Okay. Indemnity insurance, the financial compensation provided by whom? The insurance company to the policy holder to cover the actual financial loss or damage suffered. Okay. Now, what is, as Hannah said, the goal of the indemnity is to restore the policyholder to the same financial position they were in before the covered incident occurred. Okay, incident occurred. Now, this is just a detailed one. Write it down and crop it as you want. Okay, it can be equal or it can be less also. Okay, right. Okay, shall we move to the next one now quickly? Okay, what are the two main types of marine insurance? Okay, marine insurance. Now there are two types of insurance, okay, life assurance and general insurance. Under general insurance, you have a lot of insurance. Okay, one of that is marine insurance. What is this? What is this marine insurance? Let me see. Okay. Great, Anthony answers. Hull and cargo. Great. Okay. So marine insurance means the losses which is caused to the ships or the goods in them when they are transporting by the sea, that will be covered in marine insurance. Okay, the losses to the ship or to the goods that is being transported in the sea, those type of losses will be covered in marine insurance. There are two main types of marine insurance. Okay, one is the hull insurance and the second one is the cargo insurance. Okay, now write it down. Hull insurance and cargo insurance. What is hull and what is cargo? I'll tell. So before that, write it down. Hull insurance and cargo insurance. Okay, now see, I 32 questions. You briefly define the given terms. What are these? These are the hull insurance things. Now types you have. Okay, so what is hull insurance? So in this hull insurance, what will be insured is the considering ship will be insured. Okay, its equipment will be insured. Okay, the ship, its equipment, the crew members, okay, and even some other tools, those are covered. Okay, so who can get hull insurance is the shipping companies only get this hull insurance. Okay, so what are things? Not only the ship, guys. Okay, in hull insurance, the ship, its equipment, the crew members, as well as other tools are getting covered. Okay, so see, there are types here. These are types of hull insurance only that I have given. So for first one is policy. Where you sent any message? No. The first one is full option policy, or we call it as comprehensive policy. Full option policy or comprehensive policy. Okay, so what is the simple definition? All the related risk to the ship is covered. Write it down. All the related risk to the ship is covered. This is what full option policy, or we call it as comprehensive policy. Okay, all the related risk to the ship is covered. Okay, and what is this total loss policy? Now, full option policy is all the related risk to the ship is covered. Okay, total loss policy is they make the compensation only in a total loss. That is, if the ship sinks, then they make the compensation. Okay, so this chapter is all about bad omens and stuff, no, dying and ship sinking and accidents. Okay, so total loss policy is compensation is paid only in a total loss. So in brackets, write sink, ship sinking. Okay, compensation is paid only in a total loss. Okay, next one, port risk policy. What is this port risk policy? Now, if there is damages that had occurred within the port or within the harbor, those damages are covered in this policy. Okay, port risk policy is damages occurred within the port or harbor are covered. Damages occurred within the port or harbor are covered. Damages occurred within the port or harbor are covered. Okay, port risk policy. Now, what is this maintenance policy? Maintenance, these are coming under hull insurance. Okay, maintenance policy is unexpected maintenance risks are covered. Write it down. Unexpected maintenance risks are covered. Unexpected maintenance risks will be covered here, which is maintenance policy. Unexpected maintenance risks are covered. Okay. Now, construction all risk insurance policy. What is this construction all risk insurance policy? Now, during the ship is being constructed, if there is any damage or any risk that occurred to the external party, that will be covered here. Write it down. Risk occurred during the ship constructions. Risk occurred during the ship construction risk occurred during the ship constructions to the external parties are covered. To the external parties are covered. Risk occurred during the ship constructions to the external parties are covered. Okay. Risk occurred during the ship constructions to external parties are covered. Okay, guys. Now, you know, after your exam, what you do is in your TikTok, type something called the North Sea. Okay. So in the North Sea, if you see that sea is so angry. Okay. So it's like so rough, that sea. So in that sea and all, you'll see a lot of things. Now, nowadays, I'm getting lots of reels like that. And also, you after you type that, you will get all the reels related to ship, how they are taking the ship to the sea, how they are now from the land they have to put it to the sea. Now how are they doing that, landing the ship or something like that? You see those things, will you, after your this thing? Yeah, miss the second point, can you repeat? Second point means, you mean this one, no? Total loss. Compensation is paid only in a total loss, that is during a sinking thing. Total loss is paid only, sorry, compensation is paid only in a total loss. Okay, compensation is paid only in a total loss. Okay, we're gonna finish insurance now. Okay, total loss is paid on, see, compensation is paid only in a total loss. Okay, I considered the doubt of someone. They asked what is the third party, that minimum insurance coverage, minimum third party insurance. I'll teach that one. Okay, okay, I'll first of all say that one, will you? Okay, so this third party cover. Now in your motor insurance, you have three types of insurance under motor insurance, which is do I have a question like that? No, I don't have a question. Okay, guys, this is an extra question. Okay, so what you do is write it down. Teacher, you missed to explain cargo insurance. Okay, I missed to explain cargo insurance, right? Uh, so this cargo insurance, now hull insurance is obtained by whom? By the shipping company, right? So cargo insurance can be obtained by the shipping company or the cargo holder. Okay, so that is like they are obtaining a financial protection for their goods, right? Now there can be different types of damages happening to the cargo during the voyage, no, and also when they are loading those cargo to the ship and when they are unloading those cargo from the ship, then damages can occur, and during the voyage also damages can occur to the cargo, the goods, right? So the shipping company get that one, can get that one, or else the cargo holder can get that cargo insurance just to protect his cargo. Okay, simply that is that. Okay, guys, now this question is not now. Now I'm explaining about motor vehicle insurance. Okay, do I need to explain that one, or shall I just clear the doubt of that person? It is minimum third party insurance loss. Now, do you think it's a move on in the sense, move on from the question? Is it so? Clear her doubt. Okay, I'll clear the doubt. Is that so? Okay, I'll clear the doubt. Right, now there are types of motor insurance. Okay, so there is like full insurance and third party fire and theft insurance and third party cover, or we call it as minimum legal cover. Okay, so this third party cover means the losses which had occurred only to the third party and the properties are covered here. Okay, in this coverage, the losses that had happened only to the third party and properties will be covered. Okay, so that the premium payment is very low. So who are the things, what are the things which are compensated is the general public and the public properties. Okay, only will be covered in this insurance. Okay, so to run a motor vehicle in Sri Lanka, usually in every country, you should have at least a minimum third party insurance, this coverage, which is you're protecting at only the third party, the general public or the public properties. Okay, is that clear now? Okay. Explain deviation of voyage. Okay, great. Okay. Deviation of voyage. What is this? Now, this deviation of voyage is applied not only for ships, also for aircraft. Okay. So, if the ship, if you're considering ship or if you're considering aircraft, if it doesn't follow the assigned path to reach the destination, we call it as deviation of voyage. Okay. So, for every ship and for every aircraft, they will give an assigned path to travel. Okay. So if you don't travel in that assigned path, we call it as deviation of voyage. Deviation means going away. No, now we get deviated by this social media from our concentration. No, something like that. You're not following the assigned path as a ship or an aircraft. Okay. Due to yeah, I'll come to that point. Yes, Mr. Okay. So now if any accidents or if any damage happened, if you had because of this deviation of voyage, now you took a different path because you just for the leisure purpose you took the path of the North Sea, you want adventure. Okay, types is North Sea and sea, so most of the time it's always rough. Okay, so you want adventure, you took the North Sea path. Okay, so if just for that, if you had taken and let's say the ship capsized, okay, or else the goods, you have to throw the goods out, jettison, I'll come to that. Okay, so that those type of losses will not be compensated. Compensation will not be paid in an accident or damage that had happened because of deviation of voyage. But there are some situations where this deviation of voyage becomes legal. There are certain unavoidable situations might be there, no? Now deviated to avoid a war. Now what this Yemen is doing, okay, now it's doing a right thing, but the assigned path is to go through the Red Sea, right, for the Israel ships, okay, but because of the war, that's not war, that is ethnic cleansing, genocide, okay, so because of this, what the ships are doing is they are going through that indirect long path, okay, so what they are doing is yeah, so because of that, the voyage, that deviation of voyage happened. Now, if in that time, let's say the Israel ship sinks down to the bottom of the sea, okay, then they will compensate. Okay, then they will compensate. Okay, if not, they will not compensate. Now, the Israel they just do some crazy stuff, no? So they just deviated because they like to go through Africa. So then, if some compensation happened, then accident happened, then they won't compensate. Okay, so that is one example, a real world example, that is a deviation of voyage. Now because they are not sending, no, that is one reason, acceptable reason. Okay, and the other one is one other exception, one is to deviate to avoid a war is happening. So let's say because between these two people war is happening, another ship is going, then they can avoid the path. They're not related to this, they can avoid the path and go from somewhere, so then this is legal. Yeah, okay. And the next one is to avoid a bad weather. Storm. A storm is happening, okay? So you can't go from through that. So then you can avoid that and go. Okay? To avoid a bad weather. And the next one is deviated because of an unexpected repair. The ship repair. Oh, let's say the aircraft, no, they do emergency landings most of the time, no. So they are deviating only because of a valid reason, which is because of an unexpected repair. Okay, due to unexpected repair, due to bad weather, or to avoid a war, this can happen. Okay, okay, so but in your exam, don't write the situation that is happening here. Okay, so the supporters, they can cut your marks. Okay, so don't write that. That is for your understanding, I told. Okay, so what are the strategies used by motor vehicle owners to minimize motor vehicle insurance? Okay, what are the strategies now as a motor vehicle owner? Now if you want to wait, give me 1 minute. Motor vehicle premium, it should be. Okay, so what are the strategies used by motor vehicle owners to minimize motor vehicle premium? What are the strategies? Okay, one thing is they can obtain no claim bonus benefits, right? They can avoid from making claims, and the next year they'll get no claim bonus benefit, then they can minimize their motor vehicle premium, isn't it? So that is one way that they use, which is obtaining no claim bonus benefits. You have to write it down while I'm saying itself. Okay. obtaining no claim bonus benefits. And also they can obtain the membership of Ceylon Automobile Association. If you have got membership, if you are a member of that, then there is a chance where you get to pay minimum compensation claim. Okay, they can obtain the membership of Ceylon Automobile Association. Right. If you don't mind, can you just give me 1 minute? I'll be back.
Okay, actually, I didn't go to wash my hand after eating kiri toffee. And can you, and I can't understand the deviation of voice. Can you explain it again? Yes. Can you just wait till a bit longer? I'll cover this area and then I'll go to that. Okay. So we complete at least insurance today. Okay. Uh, Okay. So what are the things I told? They can obtain no claim bonus benefit. And the next one is they can obtain the membership of Ceylon Automobile Association. And the third one is they can set minimum compensated limits. Write it down. They can set minimum compensated limits. So what is this minimum compensated limit means? That is the lowest amount of coverage that a policy must provide for certain type of claims. Okay, the lowest possible amount that that the policy can provide for certain types of claims. Okay, for example, how to say? Now, if you take motor vehicle insurance as it is, now that is a question, right? So there are minimum limits. Like for example, bodily injury per person. This is the minimum limit of compensation. Or bodily injury per accident. This is the minimum compensation. Or the property damage per accident. This is the minimum compensation to be paid. Like that, you're setting a limit. So if you set minimum compensation limit, then minimum compensated limit, then your premium payment will reduce. Okay, so that's a strategy used. Okay, so it's like there's a basic level of financial protection, no, for an individual or for property or whatever it is. You understand? So that is the minimum compensated limit. Okay, so if you set that limit, then your premium payment will reduce. Okay, is it clear? What was second? Okay, second one is they can obtain the membership of Ceylon Automobile Association. You're getting the membership of Ceylon Automobile Association. Okay. Okay, guys, now shall we move to this one? Okay, this should be insurance, not business. Okay, cut it down and write insurance. Fill this out. That means I'm telling you to fill the types of insurance. Okay, so it should be insurance. So there are two types of insurance. Okay. What are the two types? One is life assurance, that is assurance, life assurance. And the next one is general insurance. Write it.
Life assurance. And next one is general insurance. Now, what are the things which are coming under here? I will tell you. Okay, write it down. Life assurance and general insurance. Life assurance and general insurance. So, under life assurance, you have four things. But first one is annuity assurance. Write it down. I'll give a simple definition at least. Okay, annuity assurance. Second one is whole life assurance. Annuity assurance. And the second one is whole life assurance. Next one, endowment assurance. Endowment assurance. Annuity assurance, whole life assurance, endowment assurance. Annuity assurance, whole life assurance, and endowment assurance. And the last one is term assurance. Term assurance. Term assurance. Okay. Great, guys. So now come to the general insurance. General insurance, write it down. Theft and burglary insurance. Theft and burglary insurance. I'll try to give a small explanation, small definition. Okay. Theft and burglary insurance. Natural disaster insurance. Theft and burglary insurance. Next one, natural disaster insurance. Third one, marine insurance. Marine insurance. Fourth is motor vehicle insurance. Yeah, a burglary reminds me of burgers. It's the same. I remember like that only. Actually. Motor vehicle insurance. Fifth one, liability insurance. Sixth one, goods in transit insurance. Liability insurance. Sixth one, goods in transit insurance. Goods in transit insurance. Seventh one, money in transit insurance. Transit. Okay, this is it. Okay, goods in transit and money in transit insurance. The last one is fire insurance. Anything apart from life insurance. Okay, fire insurance. These are the general insurance. Okay, I'll give a small explanation, not going into very deep. Okay, so term assurance. Okay, term assurance, it's like this. Okay, how to say? It's like this. Now, let's say a person, he purchased an accident life cover. Okay, and the accident life cover, it's worth 1 million. And also the time period is 1 year. And his premium is 10,000. Okay, so within this considering 1 year time period, if this person dies due to an accident, 1 million will be paid to him. If not, his premium will not be returned. Term assurance. Term assurance means it's a policy obtained to cover identified risk related to a person within a specific time period. Within a specific time period, they'll cover that risk. If that risk happened within that time period, they'll cover it. That's why I told you example. A person is there, he purchased accident life cover. What did he purchase? Accident life cover. Not million. It is 10 lakh. Okay, and that is for 1 year. What is the premium? The validity is 1 year. Premium is 10,000. Premium is 10,000. So within this 1 year, if he dies, and also if it is because of accident, then they will give that 1 million to his associate. Okay. If not, premium will not be returned. Simple as that. Okay, premium they won't return. He should die within that period. Okay, and also he should die because of accident. Okay, that is term assurance. I'm just giving the examples to make you understand for now. Okay, and the next one is whole life assurance. Now this whole life assurance is a very long term policy. Okay, this insured he should pay premium until he dies, or else the premium should be paid for a very lengthy time. Okay, let's say that person didn't die till he is 110. Then for a lengthy time, he will have to pay that insurance. Okay, if they didn't settle the full, if they give insurance, if they didn't settle the full premium payment, then they will. Yeah, defaulted payments, there is another side in this chapter. What happens if you defaulted the payment? There are options to overcome that. There are certain options that you have to face the consequence. Okay, so it is different. Okay, that case is different. If you don't pay the premium, what happens? It's different. There's a story behind that. Okay, but I'm not going to go to that. Every theory tube will have that section. Please open that and study that area which I have not covered in the seminar. Simple, no finish. Okay, so only whatever studying here, you don't need to study again even. I'm covering everything. I'm not just moving here and there around. I'm trying to cover all the stuff that I'm teaching here. Okay. So guys, if you think that there's something missing, go to the theory tube, study. Okay. So if I have time, let's say if I finish the 13 also, I'll try to cover some 13 chapters. If I do that, we'll discuss certain areas which I have missed in. Okay. So defaulted payments, I'll come to that. That is there's something called lapse policy and stuff. Okay. So I'll come there at the end. Let's see. Okay. What was I telling you? Wait. Whole life assurance. Okay. So whole life assurance, he should pay the premium until he dies or for a certain time period, which is very lengthy. He has to pay. Okay. And also the compensation will be paid to his dependent only if he dies. Okay, he should die, and only dependents will get that policy. There are certain movies and stuff. No, the old ones they die because then they get things, and there are certain instances where they kill to get the insurance compensation. There are instances. Okay, so it's like this. Let's say an example to make it clear. Amal, he pays a monthly premium, and that monthly premium is 25,000. Until he becomes 65, he will pay. Or let's say he dies before 65, then the compensation will be paid to his dependent at his death. Okay, which is like 5 million is the compensation that will be paid if he dies. Okay, if he doesn't die, then it will be paid to him at the age of 65. That is whole life assurance. Okay, guys. And then we have endowment assurance. Okay, endowment assurance policy is obtained for a certain purpose, for the marriage of your child or for the higher education of your child. Okay, so that thing is obtained. Or else they have take it as an investment. They are getting this insurance as an investment. That's why I told you you can use this assurance policy as an investment, right? That is because for a specific purpose, maybe for your child something, or else for a purpose of investment also you can have this endowment assurance. Okay, so this is also a very long term policy, and all the premiums you pay monthly or you pay quarterly, you pay. Okay, it depends. Premium payment frequencies are different from policy to policy. Okay, and what else? Compensation they will pay only if that insured is coming across that risk. Okay, only if the insured come across with a said risk, then they will pay the compensation. Okay, now let's say that risk has not occurred, not happened. What will happen? They will repay the premium. Okay, they will repay the premium, but there's an option where they will repay it with a bonus, or they will repay it with a profit. That's why it's like an investment return, like that. Okay, if that this didn't happen, let's say that person didn't have a child, or that child is too adamant not marrying. Okay, so So he'll not get paid. No. So what happens is it will be given to him. They'll return the premium as an investment, and like it's a return. As a profit he'll return it. That's the thing of investment. No. So that is endowment assurance. Okay. The last one is annuity assurance. Annuity assurance is like this. Okay. The insurance company is promising you an income that will last for a lifetime, or that will last you a lifetime. Even after you stop working, you get paid. Okay, so that is annuity assurance, that they are promising, the insurance company is promising you get an income that lasts you a lifetime. Even after you stop working, you get that income. Okay, simple as that. Okay, so are you all clear? If yes, raise your hand. I know I'm being a bit fast because I should be fast at this moment, right? I wanted to cover certain area. At least even if you don't write, if you have not studied that thing, you will understand, no? At least. So that's why I'm being a bit fast. I'm not giving time to write and all because only 12 days more for you. Okay, that is the thing. Okay, so general insurance also types are there. Yeah, this is like a recap for you. Okay. First of all, I gave you time to write in the first seminar, but I thought it will not be productive. If I have given time to write till now, then we would have not even come to this chapter, money and finance. Okay, it's like a recap for you. Just go through. So even if you don't get time to write it down. So what else? Okay, so if you want to get any definition of general insurance, let me know. I'm not going to fill everything. Maybe some general insurance. If you don't know certain things, type and send me. Okay, annuity insurance is not clear. Annuity insurance, it is like given by the insurance company. Okay, when they'll promise you an income. Like till you die, it's like monthly. I will give you this much, or quarterly we will give you this much. They are promising you an income that will last you a lifetime. So even after you stop working, they will pay that insurance, that income to you. Okay. So are you all okay with general insurance and everything? Anything else? So next class, inshallah, what we can do is, okay, so what we can do is go to trade, and then we can go to grade 30. I hope I go there. The insurance. Someone wants to know what is the insurance. Let me try to explain. Now that is a concept related to insurance. Okay, reinsurance is a concept which is related to insurance. Okay, it's like this. Okay. I'll give you an example. So it's like what you said, okay, but this is like, I'll give an example, then you would better understand. So Amal is there. He has a car. Okay. Yes, I'll come there. Ramalakshmi. So he has a car. Okay. And he is going and insuring his car in SLIC. Okay. In an insurance company, that one is SNIC or SLIC. Okay. And he is insuring it for 5 million. Okay. Now this SLIC is there. No. Who is there? Amal. Okay. Amal is going and insuring his car in SLIC for 5 million. Okay. Now this SLIC, what they will do is they will insure the same car in a Singapore company. Okay. In a Singapore company, same car, they will insure this. Okay. But they will insure for 2.5 million. So that is this concept is called 50% reinsurance. They are not insuring the whole amount. Okay. They are insuring a 50% reinsurance, where they are insuring it for 2.5 million in a Singapore company. Okay. So are you clear now? There can be different cases, like even for 25% reinsurance, or even fully sometimes. Okay. That is certain things only they do. That is to shift the risk of paying compensation to another insurance firm and all. There are certain reasons. Okay. No, and also they want to ensure long-term existence of their insurance company, and also the other thing is insurance company, they become capable of accepting high value assets with high risk. So half they are insuring in another company. Okay, so those are the purposes, as I said, transferring the risk, yes, shifting the risk of paying compensation to another company, and to ensure long term existence, and also to be able to accept high value assets with high risk. Mm, okay, so what is, does this pay premium to that? Yes, yes, Aisha, they pay. Okay, can you briefly explain the difference between reinsurance and double insurance? It's like this. Okay, it's like this. Reinsurance, you have understood now. Dual insurance or double insurance, it's like this. You're insuring as an insured, you're insuring your asset in two or more insurance companies at once. Okay, at once you're as an insured. Okay, you're insuring the same asset. Okay, uh, in two or more insurance companies at once, dual insurance. But the compensation will be paid under contribution principle. As a contribution principle, check your theory too. Okay, based on that only, the compensation will be paid. There's an equation to calculate the compensation when you have insured in more than two companies. That is compensation, sorry, contribution principle. Check that one. Okay, what else? Uh, what is, someone asked me, endowment assurance, no? Endowment assurance, it's like that you're insuring for a certain purpose that comes under assurance. You're insuring, obtaining an insurance policy for a certain purpose, for the marriage of your child, or for the higher education of your child, or as an investment. You're insured. Okay, so if that risk happens, they'll pay the compensation. If the risk didn't happen, they will repay the premium with bonus and profit. Like an investment, they will repay you back. That is endowment assurance. Okay, is everything clear? Are you all okay? The next class we can start trade. If everything is clear, let me know, then we can end the class for today. Okay, underwriting. I think, is it you who asked that doubt and I told I will explain? Is it you? Underwriting. I'll let you know about the next class schedule as soon as possible. And Sumaya, you have raised your hand, that means you're okay. No? Can you please repeat the 30th one concept? Underwriting is also different thing. I can give you conduct paper classes. Actually, paper classes, I stopped for this. It's over, and now the free classes are being conducted, paper classes, but for the 2024 and 25 batch. Hmm, okay. Yeah. Can I send you a picture to you, Sumaya? 30th answer. Okay. Barakallah. Barakallah. Okay. Walaikum salam. Barakallah. Okay. May Allah bless you too. Underwriting also I wish to explain. Right. Walaikum salam. Warahmatullahi wabarakatuh. Okay. Underwriting. It's like this. Okay. Hmm. Now underwriting in insurance is kind of different. Okay. Now it's like this. The risk is there. No? A given property will have a risk. That risk is accepted by many insurance firms. Okay. Many insurance firms accept that risk. Okay. And they issue a joint policy. Okay. Or they issue one policy together, that is underwriting. They issue a joint policy, one certain a risk. or let's say it's a big high value asset, okay, they have accepted that risk is accepted by many insurance firms, okay, and they issue a joint policy or one policy. For example, let's say there's a ship, okay, that ship's worth is 2000 million, okay, it's a huge amount. So they will go and insure it to different, many insurance company will accept it. How will they accept this one? Let's say there are four insurance company 1 will accept 500 million, company 2 500, company 3 500, company 4 also 500, okay, together makes 2000. So they have shared and taken that one, the value, because one can't accept the total thing. 2000 million is too much money, so they have jointly taken. To understand, they are accepting, many insurance firm are accepting, and then they will issue a joint policy together, okay, that is underwriting in insurance. Are you clear now? Ah, deviation of voice. Okay, okay, so so it's like this. Deviation of voyage means a ship or an aircraft, they will have an assigned path to reach the destination. No. So that is a deviation. If you are not following that assigned path, then it becomes, that is what we call as deviation of voyage. If you don't follow that assigned path, that is called as deviation of voyage. Okay. So in that deviation of voyage, if any accident or damage happen, they will not pay the compensation. Okay, because you have deviated the path, right? So, but there are certain instances where they will pay. That is, if you have deviated because of some valid reasons, like to avoid a war or to avoid a bad weather or for some repair purposes. Your ship is getting repaired, so you're deviating and going to the nearby land. Your ship has a hole or something. So then they'll pay the compensation if you had deviated and because of this reason, and if any losses happen during that time because of this reason you have deviated, and during that time if any losses happen, then they will compensate. That is deviation of voyage. Clear? Okay, Ramalakshmi, you're welcome. Okay, guys, then that's all for today's class. Inshallah, we'll meet in the next class. I'll tell you when, maybe tomorrow or maybe Monday. Some of you all are celebrating Christmas, but you all should not be, you should join, even if it's a festival, but I understand. So Tuesday or whatever it is, I'll let you know the time. Okay. We'll do some more classes. Okay, guys. Thank you so much for participating. Take care. Bye bye.